Friends, if you have recently received a tax intimation similar to this, then don't worry. Watch the video till the end. Recently, many individual assessors have received intimation from tax department through emails or SMS for financial year 2024-25, assessment year 2025-26, alerting taxpayers to review their claims in income tax return, or ITR, for deductions and exemptions due to potential mismatches identified through advanced data analytics. Income Tax Department also issued a press release date the 23rd of December on this matter.
The mismatched includes: Number 1. Non-disclosure of foreign assets, like ESOPs, in ITR. For instance, an employee of multinational company in India is getting ESOP vested for foreign holding company. The MNC in India has properly deducted TDS at the time of vesting this ESOP and there was no tax liability left out. The individual assessors are required to disclose this foreign assets in ITR2 or ITR3 using Schedule FA, Foreign Assets. Taxpayers are mandatory required to make this disclosure. Failure to disclose foreign assets can lead to a penalty of 10 lakh rupees under the Black Money Act, 2015, and potential prosecution.
Number 2. Bogus donations to political parties. Various assessee claimed deduction under Section 80 GGC for donating registered unrecognized political parties. The taxpayer makes a donation to a bogus or non-operational political party via check or electronic transfer to meet the non-cash requirement for the deduction. Most of the donated amount is returned to the original donor in cash, after deducting a commission. The donor then claims a 100% deduction on the entire, donated, amount under Section 80 GGC in their income tax return, ITR, thereby evading tax.
Number 3. Circa bogus claim of house rent allowance, HRA, typically involves fabricating documents to create the illusion of genuine rental expenses, thereby illegally reducing taxable income. This included fabricating rent agreements, forging rent receipts, misusing PAN details of fictitious landlord, fictitious payments to relatives. The assessee claims deduction of HRA in income tax return and get exemption from taxable salary income.
Now, what should assessee do?
Number 1. Taxpayers are advised to file a revised income tax return by the deadline of December 31, 2025, if they find any errors. And, Number 2. If they miss the 31st of December date, after the 31st of December, taxpayer are advised to file updated return, ITRU, with additional tax, which increases the longer the delay. The maximum timeline for filing an updated income tax return, ITRU, is 48 months, 4 years, from the end of the relevant assessment year.
It is highly recommended to take support of your chartered accountant to understand the intimation and while responding to department. So now the important question is, how should assess revise the income tax return or file updated return?
Follow these steps in order. First, log in to the e-filing portal. The official intimation and details of any discrepancies or demand will be available on the income tax e-filing portal under the e-file or pending actions section. Second, B. Download and review the intimation. Locate and download the intimation order. This document will detail the differences between the income, deductions, tax claims you reported and the details available with the IT department. Third, circa understand the reason. The intimation is usually an automated process comparing your data with records like Form 16, ICE, Annual Information Statement, and Form 26 as. Common reasons for a demand, tax payable, include reasons stated above and may also cover mismatches in TDS, tax deducted at source, data. Fourth, responding to the intimation. If you agree with the discrepancy, you must pay the outstanding amount of tax and interest through the e-filing portal by filing revise income tax return or file updated return, ITRU. Fifth, if you disagree, you can file a response explaining that the claims made is genuine. Please be noted, filing response is not mandatory at this point in time as the intimations were not issued under any section. And lastly, sixth, additional tax liability. Filing an ITRU requires the payment of additional tax, which increases the longer the delay. Within 12 months from the end of the 25% additional tax. Between 12 and 24 months, 50% additional tax. Between 24 and 36 months, 60% additional tax. Between 36 and 48 months, 70% additional tax.
There are consequences if you don't take any action. Submitting bogus donation and HRA claim is considered income misreporting and tax fraud, which carries severe legal and financial penalties under the Income Tax Act, 1961. Penalty. Penalties can range from 50% for underreporting income to 200% of the tax payable on the misreported income. Interest. Taxpayers are liable to pay interest on the unpaid tax under Sections 234A, 234B, and 234C. Employer action. Employers who fail to perform due diligence may also face scrutiny, and employees caught in fraudulent activities may face job termination. Failure to disclose foreign employee stock ownership plans, ESOPs, in an Indian income tax return, ITR, can lead to severe consequences under Income Tax Act, 1961. Penalty of 10 lakh rupees. A flat penalty of 10 lakh rupees can be imposed for each year of non-disclosure or inaccurate reporting of foreign assets in Schedule FA of the ITR. Stringent penalties and prosecutions under the Black Money, Undisclosed Foreign Income and Assets, and Imposition of Tax Act, 2015. Thanks for watching. Please act now.